Futures trading involves a substantial risk of loss and may not be suitable for all investors.
Hi, everybody. Welcome back to Markets on the Move. I'm Marlin Bohling with you, along with the one and only Oliver Sloup of Blue Line Futures. And thanks for joining us here as we look at the market action on a Wednesday. Oliver, it looks to me like you maybe kind of had a Chamber of Commerce day going on in Chicago. What's going on there?
It was a busy day, some exciting things going on in the markets. You look at the agricultural space, there was a lot of red, and we'll get into that a little bit later. But a lot of the excitement was really in the precious metals, which is how we started off the new month of trade with a bang in the precious metals Sunday night. Gold and silver ripping higher and seeing some follow through in those markets today. So we'll just hop over to those charts first. Why not? Heck, we've got gold contract pulled up here, and as you can see, we're making new all-time highs on a breakout above that big resistance level near 35.50. At all-time highs, you start to wonder where the next level of resistance is from here and what the catalyst would be. I would say, over the last couple of sessions, definitely you're starting to see that FOMO trade pick up, though. So it'll be interesting to see how the rest of the week pans out into that non-farm payroll number on Friday morning.
Well, some people look at markets from the aspect of hedging, and some look at the aspect of trading opportunities. And this is one market in particular that has really presented big opportunities this week as far as the gold and silver, right?
Yeah, gold, obviously, great opportunities, especially if you're longer term bullish this market. We've been in a holding pattern for the last couple months. Finally broke out recently, accelerating to the upside, which is nice to see. Silver, as you had mentioned, also presenting some great opportunities. You and I had talked about a week and a half ago about this wedge forming, and we're looking for a potential breakout or breakdown. The bulls got the lucky bounce. We broke out to the upside, and you started to see that accelerate. And so you're seeing silver trade up to the highest levels since 2011, so 14-year highs. I remember trading metals back then over at Lynn Waldock. We were just knocking on the door of $50. We came just shy of that in the spring of 2011. But it's starting to feel like that overall sentiment and excitement is building up to something similar to that. And silver has really been a laggard relative to gold. So if we continue to see this momentum snowball uphill, I think silver still has some room to run. You and I talked about recently too, kind of the investment appetite. I feel like people are just starting to take note of precious metals, especially on the institutional side. And once you start to get institutions involved, I think that's where you could really see things continue to move to the upside.
However, we're at the point where I'm starting to hear the general public talking about these markets, the precious metals. And to me, it used to be an old saying, when the shoe salesman started buying a certain market, then you know that market is acting kind of toppy. Is there anything like that going on right now?
I think we're probably in the early innings. I think we probably will see a little bit more volatility in the coming weeks and months with the moves that we have seen. But the central bank buying has really been underpinning this market. So I would expect if we do get sharp corrections and pullbacks, I think central banks are going to continue to step in and be buyers in that market. They're not necessarily in there trading in and out of this thing. They're looking at it as longer term investments and diversification. And when you look at diversification, you're talking about potential tariff threats, potential sanctions. You've got China meeting with Russia and India this week. So I think there's just a lot of uncertainty globally going around that's really kind of adding an undercurrent to these precious metal markets that really have been asleep for the better part of the last 10 years or so. So they're starting to wake up, starting to get excited. I don't know that I would chase it up here with the RSI being pretty overbought here in the short term, but the trend is still pretty healthy in my opinion.
By the way, these charts that you're showing, are those available through Blue Line?
Yeah, these are on our Blue Line Edge platform. It is free to clients. It's a great tool to use. You can trade from this platform as well. We've got a great mobile platform. So desktop and mobile, whether you want to place trades or just draw some charts on your own, always an option. Then we've got a trade desk here as well. So if you want to do charting on your own and then talk to a broker to place trades and execute that way, that's always an option.
Very cool. Well, they're nice looking charts. I like the way they display out there. Well, we talked about traders like markets that move, and they were really moving in the precious metals. But it doesn't matter if they move up or down. If you're looking at for markets that move, what was another one today that really caught your eye?
Crude oil market had a big day yesterday, kind of a false breakout, gave it back today. There is an OPEC meeting on Sunday, and rumors here this morning, which kind of triggered the sell-off, was that we're going to see production increases yet again. Then on top of that, we had JOLTS job data this morning, which was softer than expected. So softer economic data this morning, coupled with potential increase in production, really kept a lid on the rally. It'll be interesting to see what OPEC nations do. And talking about the economic data, we've got that big non-farm payroll and unemployment report out on Friday morning. That could potentially be a catalyst to move some of these markets as well, not just the metals, but you look at energies as well, and potentially the currencies, which could spill over into some volatility in the ag markets to round out the week.
Well, talking about markets on the move, we did have several ag commodity markets that made some big moves today. One was soybeans. We'll get to that in just a second here. But when you're talking about markets on the move, we have to talk about cattle. Feeder cattle had a big move today. It wasn't necessarily silver lining, but what's going on here?
A choppy trade in cattle, and when we were writing this morning's livestock roundup, which we send out to clients each and every morning, covers live cattle, feeder cattle, and lean hogs, we talked about a very, very wide trading range being established, about $10, which, a year and a half, 2 years ago, you'd say, well, a $10 range, I mean, anybody can pick out a $10 range. But in this market, you can see on the chart, $10 isn't very much when you're trading at these levels. So we're mostly consolidating. It feels like the momentum is starting to slow a little bit to the upside, but there really hasn't been any technical or fundamental damage just yet. So it'll be interesting to see if this strength can continue. If we take out these lows from late last week, I think potentially that could spur some additional long liquidation and profit taking from funds, but what the catalyst is going to be to do that, to be determined. So I think we're just smack dab in the middle of the range over the last 5 trading sessions or so, and we're just kind of in a wait and see mode whether cash is going to continue to firm up or we're going to start to stall out and see some profit taking take place.
Well, before we looked at the livestock, I mentioned that we had a big move in soybeans. Now, all the grain markets seem to be under pressure, but they were led lower apparently by soybeans. How come?
Soybeans has turned into a little bit of a weather market here to start the week. We went into last week, or the long weekend rather, with maybe some weather premium baked into the market. You saw some rains work their way back into the forecast for some areas that certainly need it. And so that started us out on our back foot to yesterday's trade, a little bit of weakness, and then continued pressure in today's trade. So I think you've got better weather forecasts playing a role here. You've got the lack of Chinese buying playing a role here. All in all, we're still above some significant support levels. As you can see on this chart, we're looking at some of these major moving averages in the 1020s as a must-hold area. Those are going to be the 50 and 100-day moving averages. Break and close below there, and you can see that there is some error on the chart to potentially go retrace the breakout point from that WASDE report in August. So we're nearing an inflection point. No significant damage done yet, but if we get another day like today, potentially that opens the door for some pressure. And if you're, a producer out there looking to do some hedging, I don't know that you do much with the corn market right here, right now. I think I'd be a little bit more concerned about soybeans in the near term.
Well, I mentioned at the start of the broadcast here that it seems like Chamber of Commerce weather in Chicago. Are you hearing any reports of harvest activity, and is that going to pressure the corn and beans?
We have not heard of a whole lot. We've heard of some farmers getting going in some areas, and I think I was talking with one guy this morning who was looking at beans coming in about 10 bushels under last year, so it'll be interesting to see. That's just one example. It'll be interesting to see, more as more reports come out here in the next couple of weeks, how that looks for farmers more on a broader scale. I wouldn't be surprised to see it add a little bit of pressure, but again, this is a futures market, so I think the market's been kind of digesting and pricing in some pretty big harvest figures and potentially high watermark harvest figures, especially after last month's USDA report. So it'll be interesting to see if that lives up to expectations or it falls a little bit short.
Well, I know a lot of viewers out there that are watching this podcast here probably have a lot of questions about what's going on with the markets, with production. They want to get your take on that. Of course, you were on the Midwest Crop Tour here a couple of weeks ago. So if somebody wants to pick your brain about that or maybe kick around some marketing ideas, what's the best way that they can get in touch with you there?
I would say give us a call or send an email. My direct line is 312-837-3938. Again, 312-837-3938. Or you can email Oliver at bluelinefutures.com. We are ready, willing, and able to help. We deal with a lot of clients from a wide variety of backgrounds, hedgers, producers, end users, as well as a lot of speculative traders, retail and institutional. So we've got a wide range of resources here to help people of all shapes and sizes with different objectives in the markets.
Excellent stuff. And of course, be on the lookout because Oliver and his colleagues post all sorts of stuff on many social media platforms with all kinds of information. And it doesn't matter what market you're looking at, they have some comments and directions on all of it. So check it out. Well, I appreciate you being with us. Oliver, good to talk with you again, and we'll catch you soon, all right?
Take care, Marlin.
Oliver Sloup of Blue Line Futures with us. That'll do it for this episode. We'll catch you next time right here on Markets on the Move.